Hi, how to turn your business into retirement income. If you own a successful business, there's a good chance that most of your net worth is tied up in it. And here's the challenge I see over and over again. Many business owners assume that the only way to get income from their business in retirement is to sell it. But what if you don't want to sell? What if you want to step back, slow down, and finally enjoy the life you built without losing the income stream that your business provides? The good news is there are strategies to do exactly that. And if you plan ahead, your business can become one of the most powerful income sources in your retirement plan. Hi, I'm Hank Persia, President and owner of Starboard Wealth Advisors, and also hold the Certified Exit Planning Advisor (CEPA) designation. I work with successful business owners and professionals who want to turn years of hard work into a tax-efficient, reliable income plan for retirement. In today's video, we're going to talk about how to turn your business into retirement income without selling it. These strategies can help you maintain flexibility, preserve your legacy, and still have the freedom to step away from the day-to-day grind. And if you'd like help building a custom retirement strategy around your business, feel free to book a call using the link in the description, and I'd be happy to walk through your options. Strategy 1. Shift from owner-operator to owner-investor. The first step is to start looking at your business differently. When you're actively running the company, you're an owner-operator. Your income depends on you being involved. As you approach retirement, however, the goal is to transition to an owner-investor. That means putting systems, processes, and a leadership team in place so the company can run without you. This transition allows you to step back from daily operations, draw income from profits or dividends, and still keep an equity stake in the business. This shift doesn't happen overnight. It often takes several years to prepare your leadership team so that your income no longer depends on you being there every single day. Strategy 2. Use the profit sharing and distributions as an ongoing paycheck. Once you've transitioned in more of an investor role, you can set up a structured profit sharing or distribution plan. Instead of drawing a salary, you might receive quarterly or annual distributions based upon the company's profitability. This structure can create a predictable stream of income, reduce self-employment taxes compared to a salary, and allow the company to continue growing while still compensating you. For example, I've seen owners step back into a semi-retired role while receiving $150,000 to $200,000 a year in distributions. They still attend key meetings or serve as an advisor, but they're no longer working 50-hour weeks. It's a way to gradually extract wealth from the business without letting go of it completely. Strategy 3. Create a buyout or payout plan with key employees. Another strategy is to structure a buyout plan over time with the next generation of leaders in your company. Here's how it works. Instead of selling your company to an outside buyer for a lump sum, you enter into an agreement where your key employees purchase shares of the business gradually so that you receive installment payments over 5, 7, or even 10 years. This approach provides an income stream during retirement, a smoother transition for employees and customers, the satisfaction of knowing your company stays in good hands, and it's often less disruptive than a one-time sale to a third party. Strategy 4. Use your business to fund retirement accounts. While you're still in control, make sure you're using your business to max out retirement contributions in tax-advantaged accounts. For example, you could use a solo 401k or a SEP IRA if you're a smaller operation, or a cash balance plan if your business generates significant profits and you're looking to catch up on retirement savings quickly. These plans allow you to move money from your business profits into personal retirement accounts where it grows tax-deferred until you need it. Even if you never sell your business, this gives you diversification so you're not 100% dependent upon the company for retirement income. Strategy 5. Consider a partial sale or recapitalization. For some business owners, there comes a point where they say, I don't want to sell my business completely, but I'd like to pull some chips off the table and reduce the financial risk of having all my wealth tied up in the company. That's where a partial sale or recapitalization comes in. Here's how it works. Instead of selling 100% of your company, you sell a portion, maybe 30, 40, or even 60%, to an outside investor, private equity group, or even a key employee group. This does 3 important things. First, you receive a lump sum today, which gives you liquidity or money you can then use to fund retirement accounts, diversify your wealth, or even pay off debt. Second, you still maintain an ownership stake, you haven't completely walked away, and you can continue to benefit from future growth of the company. Third, you can keep an income stream, and depending upon how the agreement is structured, you may still receive dividends or profit distributions on the portion you keep. Well, why this matters? This approach is especially valuable for business owners who are 5 to 10 years away from retirement, ready to reduce risk but not quite ready to fully exit, interested in professional management support but still want to say in the company's direction, and it can also give your company additional resources like capital and expertise to keep growing without you being at the center of every decision. As an example, let's say your business is valued at $10 million. You sell a 40% stake to an investor for $4 million and you keep 60% ownership and step back from day-to-day operations. Now you have $4 million in liquid assets to build a diversified retirement portfolio, continued participation in the company's profits on the remaining 60%, and potentially a second liquidity event down the road when you sell that 60% stake. This strategy allows you to balance liquidity and ongoing income rather than choosing one or the other. Keep in mind, a partial sale or recapitalization takes planning. You need to think about how much control you want to retain, how to structure the deal so it supports your retirement goals, and just as more importantly, who you want to choose as a partner. This is not a decision to make at the last minute, and it works best if it's part of a bigger transition plan that you started several years in advance. So let's recap what we've covered. If you want to turn your business into retirement income without selling it outright, you have options. First, shift from owner-operator to owner-investor so the company runs without you. Second, use profit sharing or distributions to pay yourself instead of a salary. Third, create a structured buyout plan with key employees, letting them purchase your shares over time. Fourth, max out your retirement accounts while still in control to diversify wealth. And fifth, for some, consider a partial sale or recapitalization to access cash while maintaining income. The big takeaway, your business is one of your most powerful retirement assets. But if you wait until you're ready to step away to figure out what comes next, your options shrink. If you're a business owner and you want to explore how to make your business work for you in retirement without rushing into a sale, let's talk. Click the link in the description below to book a consultation. We'll look at your goals, your business, and your timeline, and I'll walk through your options so you can create a plan that works for you and your family. Remember, at Starboard Wealth Advisors, your financial destination is why we're here. Thanks for watching, and if you found this helpful, make sure to watch our other videos for more clear, no fluff retirement guidance, or contact us for a simple phone or Zoom call. See you on our next video.